Hey there, friends. Once again, happy Friday. Today is February 16th, 2024. My name is Phil Goff. I'm with the Home Finance with Phil YouTube channel. I appreciate you watching. This is our weekly market update where we just take a look at how the rates are going and just some, generic items out there in the news that affect the interest rates in the real estate world. Let's go ahead and get things cracking here. I have a few extra slides than normal. But we can go kind of quick. I promise. I'll try not to talk very much. So this is me again, Home Finance with Phil. I appreciate all of you. So mortgage rates this week, they haven't really gone up a lot. They've gone up a little bit. So you can see it's at 7.09 is generally where I look as the 30-year fixed rate. Just kind of a way to view things. Last week we were right around 7%. I think it was 6.97. So we do have a little bit of an incline. You can see in our chart. Whoop, whoop. There we go. That chart. You can see where we had a little bit of a drop, a pretty big drop a day or two ago, and we're kind of rebounding a little bit. Right around, where's my mouse? I can't see my mouse on the thing. I don't know why. So, but you can see right before the big drop, that's kind of where we were at the 6.97. The drop, though, has to do with inflation. We had kind of a hot inflation report. But the weird thing about that is it had very much to do with housing. Things like gas, things that are more normal to our lives. The inflation is actually looking pretty good. Everything was as expected. However, the housing reports that came in showed rent escalation, a few areas like that. Now some of these things are numbers that are impossible to quantify. It's just asking. It's like they ask people, what is your rent? Or they ask the people to charge them, well, how much are you charging? And they base numbers on that. The market does expect some fluctuation a little bit. I think it was just a little hotter than everyone thought it would be. So hopefully we see some of that coming down as our real life numbers, meaning the numbers from now, the numbers from February seem to be better. But what they see is 2 or 3 months back because they take some time compiling everything. So, hopefully we see some decline coming up pretty soon. It hasn't changed the viewpoint of pretty much everyone, which is here in the next couple of months, we should be seeing some reprieve from the Federal Reserve, and rates should be closer to 6% by the end of the year, hopefully below, but that should be kind of the average that we're looking at. So I get a lot of questions about 3-2-1 buy downs, 2-1 buy downs, just rate buy downs in general. So what we're saying is more than half of the borrowers last year used points to buy down their rate. Now I kind of go against this. I don't think it's really the best idea when we're in a high rate environment. You can see down here the last point, the interest rate differential between borrowers who paid discount points and those who did not was very small. And that's the point that I make to home buyers. And if you have me as a client, as a real estate agent, I'll explain all this to you too. The same thing I tell the clients. Look, why spend $5,000 or $10,000 now to buy the rate down incrementally when we're expecting the rates to probably drop because they're kind of at a high. They're not at an all-time high, but they're higher than we're normally seeing, right? So if you buy it down to 7% and then it naturally drops below 7%, then why have you spent $10,000? You can spend $1,000 or $2,000 in refinance when it's time. So if you want to use seller credit as a way to do like a 3-2-1 or 2-1 buy down, I do think that's a smart thing that never hurts your buyer. But from a buyer standpoint, it really doesn't make a lot of sense to be spending a lot of points. So when you hear rates and you hear people quote rates at you and say, oh, well, we've got a 6.5, well, it's because people are spending points. So everyone can play that game. I can play that game. I tend to want to be more transparent with just saying, look, this is the rate that doesn't cost anyone anything. My branch will take off a weekend. This is the rate that we land at. So just be careful when you're out there and make smart decisions, not help your buyer, your clients make smart decisions, help them make informed decisions. And that's what all mortgage lenders should do, in my opinion. I don't know that's what all of them do. Some of them just make the decision to move on. So Zillow's numbers from January, they're saying that the average days on market is 29, 26% sold above ask, which is higher than last year, up 8% since the pre-pandemic. New listings have increased, so total inventory is up a little bit, but it's just not up, where we'd like it. Obviously, we all understand that notion. And some of that is because of what they're calling the lock-in effect. And this is preaching to the choir, but catch this number, right? So nearly 89% of the U.S. homeowners with mortgages currently have an interest rate below 6%. So that's why we're saying is interest rate drops when we get towards 5.5%. Some of these lower end rates that will really open up the amount of homes that are for sale, because people will be willing then to sell and readjust and buy a new house. So it's keeping our inventory really low, which is hurting everyone. Let me see. Okay. And then just to end with just funness, congratulations to Miss Caitlin Clark. I don't know if any one of you like sports or pay attention to the news. My wife played basketball in college, so this is how we find our in between. I will watch any sports event for the most part. She will only watch women's basketball, but she did an amazing thing. She passed the NCAA women's scoring record last night, so congratulations to her. She will probably beat out Pistol Pete Maravich here. She's got 100 points or so by the end of the year. She'll be the all-time scoring record holder for all of NCAA basketball. And that is the fun part. And now we're done. So this is my information again. If you need to get a hold of me, please reach out. I know it's the weekend, and I'm here for you. So is my team. So we're all in the same boat. Say it every week. Whether it's pre-qual, whether it's just to talk, I don't mind talking, bounce some ideas off me. That's fine with me. And I appreciate all of you watching. Go get some house sales going out. The market's a little more cracking, and hopefully you'll have a good productive weekend. And I'll talk to you later. Thanks.